Welcome to Policy on Demand. I'm Sindhu Blume.
And I'm Scott McCandless. This is the week of April 29th, and this is your Monday briefing. Congress is back and begins a 4-week work period ahead of the Memorial Day holiday. The big question is whether the Senate will use the Federal Aviation Administration's reauthorization bill as a vehicle to pass the House-passed tax package. Meanwhile, House Republicans announced 10 new tax teams to study TCJA provisions set to change or expire as part of the 2025 tax cliff.
Companies now can monetize unused clean energy tax credits by transferring them to third parties, tax-free, according to final rule from the IRS last week. Joining us from San Jose to explain how this works is Wendy Punches, a managing director in PwC's Specialized Tax Services practice. Wendy, welcome.
Cindy, it's great to be here.
So Wendy, let's start with what exactly are the transferability provisions and which credits do they apply to?
So transferability was one of the new monetization provisions in the Inflation Reduction Act that allowed certain taxpayers to transfer all or a portion of their tax credits to unrelated parties for cash. The money received by the transferor is not included in gross income, and the cash paid by the buyer is not treated as a deduction. Additionally, the discount is not included in the buyer's taxable income. So these are very favorable provisions. There are 11 credits that are widely available for transfer, including the investment tax credit, the production tax credit, the advanced manufacturing production credit, clean hydrogen, carbon capture, et cetera. So really the vast majority of the IRA credits are eligible for transfer.
Wendy, could you talk about the significance of these regulations and areas of clarification they may provide?
Sure, Scott. So, when transferability was first enacted a couple of years ago, there was some real hesitancy in the market. There was a lot of talk, but not a lot of action. However, with the proposed regs and then the opening of the pre-filing database, the transfer market has exploded. The DOT has announced that there's about 45,000 projects that have been pre-registered in the direct pay and transferability portal, and at least about $2 billion in deals have been made publicly disclosed. Every day we are getting calls from taxpayers that are looking to buy or sell credits, needing help with diligence, working through the tax and accounting treatment. The release of these final regulations are significant in that they will help taxpayers assess risk, make sure that they're gathering the appropriate documentation, putting together all of the appropriate forms. But in reality, not a lot has changed in the final regs. Although there were 80 comment letters requested and submitted to the IRS, in the end, the final regulations look very much like the proposed regulations.
Wendy, thanks for that. And were there any areas where the government accepted or rejected what they heard from taxpayers? And also, were there any surprises?
Yeah, so I would say not a lot of surprises. So the one key area that they did provide some relief on is that the IRS and Treasury allow corrections, modifications, and some late filing relief, which was welcomed by taxpayers. They also expanded the definition of eligible credits under 45Q. They expanded some of the provisions about who can transfer credits, including grantors of grantor trust. And there were some, helpful clarifications in the anti-abuse provisions. I think what was kind of a key surprise was what didn't change. So there really was no relief for partnerships that have one or more tax-exempt partners. They're still subject to the 50B3 and 4 provisions, which is somewhat restrictive for partnerships with tax exempts. They clarified that advance payments are still not allowed. You also are not able to make horizontal transfers, meaning that sellers cannot sell just a base credit or just a bonus credit. A lot of companies were looking for that to kind of help manage risk, and that the passive activity rules still apply to the transferee taxpayer. Again, that was one area where commentators were really looking to broaden the potential buyers out there. They were hoping that there would be some relief on those passive activity rules, and that didn't happen. So, although there's more certainty now, which is great, taxpayers understand what the rules say, what they might need to go negotiate on a side deal. But in the end, there are probably a lot of commentators and taxpayers that were hoping that there would be more changes in these final regs.
Wendy, when did these regulations become effective, and what actions might companies consider taking in response to them?
Final regulations apply to tax years ending on or after April 30th, 2024. However, taxpayers may apply the final regulations other than the rules relating to the pre-filing registration in earlier tax years, as long as they apply the rules consistently and in their entirety.
So, Wendy, what other questions about the energy credits are taxpayers waiting for answers on? And what guidance are we still waiting for? And do we have any idea when that might be forthcoming?
Yeah, so although Treasury really has been releasing guidance at an incredible clip, we are still waiting for additional guidance related to the bonus credits. Like, one of the key areas, domestic content. They're also looking to release regulations on the energy community bonus, as well as final regulations on the prevailing wage and apprenticeship. And we are also expecting regulations on the new technology neutral credits under 45 and 48, as well as the clean fuel credits under 45Z. And then finally, we are expecting a second round of the 48C credits over the summer. So really stay tuned, as there's a lot more to come.
Wendy, thank you so much for all of that. And that's a lot of guidance to look forward to. And we look forward to having you back to talk about it.
Yeah, looking forward to it.
And for our viewers, you'll find in the description of this episode a link to the latest Week in Review with Rohit Kumar. And stay tuned for another Week in Review coming up this Friday.
And look for a tax insight about the IRS guidance, which will be linked in the description of this episode. Thank you for joining us, and we hope you have a great week. Take care.